So you've filed your taxes, and now you wait. But have you ever stopped to wonder, does the tax office have forever to get back to you? It's a question that can cause a lot of anxiety. Today, we're going to put the taxman's schedule under the microscope and figure out exactly how long their deadlines really are.
You know that feeling, right? You've gathered all your papers, you've triple-checked the forms, and you finally hit that submit button. What a relief. But that relief is usually followed by this quiet, nagging uncertainty. You're officially in the waiting game. But is it a game with no end? Does the tax authority get to take as long as they want?
Well, the answer might actually surprise you. It's a big, firm no. There is a limit, and you can think of it as the taxman's very own countdown clock. Okay, let's dive into this. The best way to picture it is like a shot clock in basketball. The tax authority, they don't have unlimited time to make their play. The law itself literally starts a timer, and they have to complete their assessment of your taxes before that final buzzer goes off. The official, fancy term for this is the statutory time limit. And what's so important here is that this isn't just some friendly suggestion. It's a hard legal deadline. If they miss that deadline, their chance to assess you for that year, it could be gone, for good. This rule doesn't just manage the process. It actually protects you from being in a state of endless uncertainty. So what does this clock actually look like for the average person? Let's break down the most common timelines that you're probably going to run into. All right, have a look at this. You can see the three main paths your return can take. For a standard, normal return, nothing too complicated, no major red flags, the clock is set to 1 year. And that's 1 year from the end of the assessment year. But if your return gets flagged for some extra processing or, say, a full-blown audit, that timeline doubles. It jumps up to 2 years. So really, the most important thing to remember is this. For most of us filing a pretty straightforward, normal return, 1 year is the magic number. That's the key everyday deadline to just keep in the back of your mind. It's your baseline for knowing when you can finally, truly breathe a sigh of relief. But of course, we're talking about tax law, so it's never quite that simple, is it? There are some special situations where that countdown clock is set to a completely different time. Let's take a look at what happens when you're under a little more scrutiny. So let's start with a really unique case. What if you've just started earning income and this is your first time ever dealing with the tax system? Does that same 1-year rule still apply?
No, not at all. In cases where income is being assessed for the very first time, the law gives the tax authority a much, much longer runway. We're talking a full 3 years from the end of the assessment year. This gives them plenty of time to establish a baseline for a brand new taxpayer.
Okay, now let's flip the script. What happens if you don't file, but the tax office thinks you probably should have? Well, they can actually kickstart the process themselves by sending you an official notice. How does that change the clock? In this scenario, a totally new timer starts. From the end of the year that notice is issued, the tax authority has 2 years to get the assessment done. The key difference here is that the trigger isn't your filing, it's their official action. And finally, what happens when things get really serious and maybe lawyers get involved? Let's look at the deadlines that kick in after a legal battle, because this is where the clock really, really speeds up. So if your case goes to an appeal or a tribunal or even a higher court and they issue a ruling, well, you can just throw those standard timelines right out the window. Suddenly, everything gets put on the fast track. How fast are we talking? Incredibly fast. The tax office has just 30 days from when they get that order to put the court's finding into action. This makes sure that legal rulings are acted on right away, no dragging their feet, there's just no room for delay. But what about the most dramatic outcome of all? What if a higher authority looks at your original assessment and says, nope, this is totally invalid. Start over from scratch. What then? For this, they get a slightly longer but still incredibly tight window. 60 days. That's it. 60 days from the moment they get that order to conduct a brand new assessment. This is what prevents cases from getting stuck in legal limbo forever after an appeal. Okay, whoa. That was a lot of different numbers and timelines, so let's just pause for a second and boil it all down. What are the absolute essential deadlines you really need to remember? Just remember these 4 clocks. For most of us, it's that 1-year clock. If you're getting some extra attention, think 2 years. If you're brand new to the whole tax system, it's 3 years. And if a court gets involved, that clock speeds up like crazy to just 30 or 60 days. Look, understanding these timelines isn't just about memorizing some obscure legal stuff. It's about empowering yourself. It replaces that vague, anxious feeling with real, concrete knowledge. It gives you clarity on where you stand, and honestly, it can provide some seriously well-earned peace of mind.
So, we'll leave you with this thought. Now that you know every tax case has an expiration date, what's the one thing you'll do differently? Maybe you'll mark your calendar for that 1-year deadline, just so you know when you're in the clear. Or maybe you'll feel more confident questioning a notice that seems like it's arrived way too late. The clock is ticking, not just for them, but for your own financial clarity. Thanks for tuning in to this explainer.